And then what does our additional information say? From these particulars, what is it that we are going to take? What is it that we must, which amount should we take here and why? Remember, UIF is paid by both people. It's paid by the pensioner, by the employer and the employee. And deductions are made from who? Deductions are made from the employee. Contribution is contributed by the employer. So it means you must include under employer's contribution. Employer is contributing how much? 90%, 90 rand of UIF. Therefore, you must say plus 90 rand of UIF. And then what else? Plus pension fund. How much is the pension fund? Let's check the additional information. The employees contributed 7% of their gross wages to the pension fund and the employer 10%. So it means we must calculate the 10% from him. But this one is only 7%. So it means we must calculate the 10%. 10% of what? Gross salary. First of all, we must get our gross salary. How do we get our gross salary? By adding up everything. By adding up the net salary plus the pension plus the UIF plus the payee. Let's check. How much is our net salary? It's 6,680 plus 1,600. 1,600 plus 630 plus 90 rand. How much do we have? We're having 9,000. You add the net salary plus the deductions, payee, UIF, and pension fund. So it means our gross salary is 9,000. So the 9,000 multiplied by this 10%, because the 10% must be from our gross salary. So here our gross salary is 9,000. 9,000 multiplied by 10%, we are going to have 9,000. There we are, multiplied by 10 divided by 100. Then we will be having 900. This 900 must come to the employer's contribution. Employer is contributing 900 for this particular person. Therefore, we must add. We say 103,400 plus the 90 rand for the UIF plus the 900 for the pension fund. Then the total of employers' contribution will be 104,390. 104,390. Then coming to salaries and wages. Salaries and wages, we must go again onto the information. Salaries and wages, we're having 940. This 940,000 plus. Why do we plus? They said the employee was left out. So it means we must include. So what is it that we add there? We add the gross salary. The gross salary for this person, we have already calculated it. We said it's net salary plus the pension fund plus the UIF plus the payee. So all the deductions plus the net salary will give you a gross salary. So our gross salary, we agreed it's 9,000. You can add again. We said it's 6,680 plus 630 plus 90 rand plus 1,600. It will give you how much? 9,000. And then the 9,000 must be added here. The 9,000 must be added here. So how much is your salaries and wages? How much is your salaries and wages? It means you must add the two together. Let's see when we add the two together. We'll be having 940,000 plus 9,000. Then we'll be having 949,000. We'll be having 949,000. 949,000. That is our wages and salaries. Then moving to the next adjustment. An interest on loan was capitalized but has not yet been entered. The loan statement for Helepu December 2013 reflects the following. We have in balance the 1st January 2013, 320,000. Interest charged, we don't know. Repayments for the loan was that much. And then balance at the end of the year was 310. How do we deal with this loan? How do we deal it? You owed 320, you paid already 50,000, but you are still owing 310. How does it go? So how do we do it? We say 320. First of all, let's check from this side. How much is our loan? How much is our loan? It's 270, 400. 270, 400. That is our loan. So how do you do it? 240, 700. That was our loan from 270, 400. That was our loan when on the 31st December 2013. So when we come this side, we said balance was 320. Was 320. How did it come that it's 320 yet we said that side it's 200 and something? It means something has happened. What happened? Have you paid? Have you been taxed more? Or what actually happened? You must check that. So this is what we are going to do. We're going to take the 320, 800. It must come here under your it must come here under your interest expense. It must come under your interest expense. It must come here under your interest expense. Interest expense. It must come there under your interest expense. We say, how do we calculate it? We said balance. Come into our calculation sheet. We said balance, it's how much? It's 320. 320, 800. This is opening balance. And then from the trial balance, we are having 270, 400. And then from there, what we repayment, this is what has been already been paid. It's 50,400. And then we said balance, it's how much? 310,000. So how do we deal with this one? We say 50,000, of which is the repayment, must be subtracted from the initial loan, if I'm right. It must be subtracted from the initial loan. How do you do that one? First of all, we must even check the months. Interest loan was capitalized and has not been yet been entered the loan statement 31st December 2013. And this one is for the 31st December 2013. 31st December 2013. I think we'll get back to this one. Let's move to the next one.